Hi, everybody, and welcome to Privacy Podcast. I'm Ben Schiller, and I hope you're doing good out there. And we've got a great guest for you today from TRM Labs. It's a pretty well-known analytics company in the blockchain space. And this is Liam Glennon. He's a researcher and analyst at TRM Labs. And he just came out with a really interesting report about privacy and compliance, and really how to square those two different things. And he looked at a number of different systems within the privacy space, and we're going to talk about it with him now. So welcome to the show, Liam.
Awesome. Thank you so much for having me. Excited to be here. Glad folks are taking interest in the paper and content we're putting out.
Absolutely. It's a very good report and highly recommend reading it through. So Liam, what were you trying to do with this report? I mean, obviously, traditionally in online and particularly on-chain, there's been kind of a conflict between the needs of compliance and the need for privacy. How do you see companies, projects squaring those trade-offs? And what did you come to in terms of conclusions with the report?
Yeah. And it's a good question as to why a blockchain analytics and intelligence firm would be leaning into privacy. So one of the first piece, that's where our clients are going, and that's what they're asking to do and asking for our support. So I sit in a unique and privileged spot at our firm because I get to see across the different business lines that we have. So from the financial institutions, think of your big banks, your asset managers, to crypto native firms. So think of your like layer one blockchains, to your regulators. Pre-TRM, I spent a lot of time with our financial regulators here in the United States, as well as on the crypto native side. So trying to kind of see in that Venn diagram of where the overlap is. So across those three groups, they're all asking about privacy and how can they implement it. I think after we've gotten to get some clarity, at least in the United States, around regulation, now firms are looking at, okay, that hurdle is gone. Now let's really look at the tech and how we go to market and implement this. And now I see privacy really as a institutional enabler for their use cases. And we can go into some of their use cases. So why are we doing it? Why do we write the paper? Why are we spending time? Customers are going that way. And then as well, here at TRM, we're making the world safer for billions of people. And we do believe that privacy is part of making the world safer, right? So for people, financial institutions, entities to engage in legitimate commerce and activities with their privacy intact while protecting those private channels from being abused by bad actors. So both where our clients are going, as well as, following our mission and making the world a safer place for billions of people. So that's why we're spending so much time on this.
Interesting. So, a lot of people would think about blockchains as private ledgers, that preserve anonymity, but increasingly that's not the case, and that's one of the things you point to as one of the drivers in the report, that there isn't that same anonymity on blockchains that companies and individuals might have been used to.
Yep. And so, when Bitcoin first came out and there was no blockchain analytics firms, I think arguably it was very private. Now that
it's all your fault, really, for denying the anonymity.
Now that as it goes more mainstream, you start to square the edges around the technology. And I actually talk to some of our regular clients now, and I say you all have been very spoiled over the last, specifically probably 5-8 years, where you can see more and more activity. That's not really how things have been before, really the last 5-8 years when digital asset analytics came on board. Most of finance was private, and between institutions that wasn't sharing information. If you remember on Venmo accounts, they initially started as public and you could see transactions with friends.
Right.
And then all of a sudden, people started saying, no, I actually don't want everyone to see like who I'm paying. And I think that's what we're seeing in the digital asset space as well, where now that it seems like the infrastructure, we can do thousands, millions of transactions per second, depending on what blockchain it is. Now it's, okay, we can do that. If we want to do payroll, we probably don't want to do payroll if we're a firm completely in the open on chain, because then like maybe some awkward conversations come up internally, or from a competitive standpoint, we don't want our competitors to see what we're doing, how we're paying our folks, where that money is actually going.
Great. So you had this question, so you set up the report, and then you looked at 5 different types of ways to do privacy. Do you want to quickly run through those and how different they are?
Yep. And the way that we're framing that, so we looked at the market. I really appreciate the compliment of me being a researcher. I appreciate that. So we looked at the market, we looked at what our clients were doing and what are the different implementations that we were seeing. So I'll run through a few of them at a high level. And I think if you're going to take away one thing from this conversation, it's view keys. And one way to think about view keys at a really high level is, I think we're familiar with private keys at this stage. So not your keys, not your coins.
Right.
Your private key, you have to secure that, or someone else can take your digital assets. In the new privacy implementations, one of the ways to think of the view keys as similar to a private key, but for the data. So if someone has the view key, they're able to see either transactions or what you've done in your wallet, or for the entire asset. So what we've seen in different implementations, for example, in Monero, and we're not focusing too much on Monero, but I think a lot of people are familiar with it in the privacy space. So that would have a transaction view key. And so if you're a party to a transaction in Monero, you can provide someone else that transaction view key, and it just shows information about that specific transaction that you were a part of. So that's one example. What we're seeing a lot more, and really from the stablecoin and asset issuers, is the asset view key. What does this mean? It means that anyone with that view key can basically see the entire graph or history of transactions for that specific asset. And I know we'll get into then a really good question of the governance and who has that view key. And some of the other implementations we've seen, something we dig into is basically membership proofs. So a lot of times something will happen off chain. A great example is being an accredited investor in the space. So basically you can provide documentation off chain. A firm will do verification and then let you participate in something on chain.
Right.
And we talk about, sometimes some of the potential risk or things you should think about depending on the implementation. But again, one big thing with the privacy space is these view keys. And the most popular, I would say, implementation of view keys we're seeing right now is at that asset level.
And those are the 5 different types?
Yep.
Okay.
Yep.
And what would you say are the kind of trade-offs between those different things? Because I mean, none of these regimes are perfect, and they offer different things in different situations, right?
Yeah. And so starting at the view key level, kind of my view is that's how you would implement the privacy and implement the ability to do selective disclosure. But then after the view key, so kind of after you technically design your privacy architecture, then something we talk about in the paper are the compensating controls. So some of the examples of compensating controls that I can speak of and bring it to some real world examples. One would be KYC. So I've seen very interesting things on crypto Twitter over the last few weeks with I would say the Ethereum Solana community and then the Canton community.
Right. Heated debate.
Yeah. So one of the things on the Canton side, when you think of compensating controls, is for most on-ramps and getting into the Canton ecosystem, which is private, they refer to as configurable privacy. You have to KYC in some way, shape, or form. So whether it's becoming a validator, providing your information, whether it's opening a wallet, most wallets that I'm aware of, you have to provide some KYC. So that's one form of compensating control. Another form, and this is probably then goes more to the, Solana, Ethereum, like that type of world, would be things like velocity and volume constraints. And this could be very relevant for certain exploits to say, okay, if you have enhanced privacy for certain assets in your ecosystem, potentially you can only transact up to a certain amount in a certain time frame. So there can be like a response time by entities. And I think the recent Drift hack could be a potential example of that. As far as we're aware, there's no like privacy implementation on the Drift protocol. We can think of, if they had a compensated control of transaction velocity and volumes, the bad actors wouldn't be able to take out all the funds at one time.
Right.
And then that's a trade-off. And we are talking to our clients about, what are the trade-offs you're making in your ecosystem. So if you are implementing privacy, what other compensating controls do you have while still providing some level of UI UX that's acceptable for your users?
Interesting. So you mentioned Drift, and maybe we can just pick up on that for a moment, because you also mentioned the famous Ronin attack. I think it was something like $250 million or maybe more. And what's interesting about that, and you talk about it in the report, is that there's this general assumption in blockchain circles that transparency equals better safety, and that's generally how we think about things. But you say in the report that in that case, transparency probably had the opposite effect, that there was kind of a belief in shining the light on everything helps everybody, but it wasn't really the case in that case. Do you want to just pick that apart a bit?
Yeah, yeah. And I think we'll start to see this more where potentially we will see less transparency in things like smart contracts. Because when smart contracts, especially for, let's say, like the complex business logic, while that allows the composability, it also allows bad actors to look at your smart contract and see where are potential vulnerabilities, exploit paths, if there are the multi-sigs implemented, who's part of those multi-sigs. And then that leads to the off-chain piece of if you can identify who's part of that multi-sig and, things like ENS. So imagine like you're part of a multi-sig, you have an ENS. That's a really quick way to identify across the social media platforms because people tend to use the same handle.
Right.
And then it gets into the spear phishing that we saw the Drift protocol exploiters go after to get those. I believe they were admin keys that allowed the exploit to occur. So I do think the like transparency was this big thing that was pushed in blockchain. I think coming out of the '08 crisis,
Yeah.
that was important with Bitcoin. Now that we're getting more complex businesses on chain, some of it you do want to keep private, again, from the competitive state as well as the security state. So maybe, North Korean bad actors can't see the exact multi-sig setup you have and what libraries that you're using. So yeah, going back to the larger exploit, both on the smart contracts themselves, and then just from while we could see the flow of funds, because those funds move so fast, right? You kind of see them, but if you aren't able to take action, and we've built some products and services like the Beacon Network, which aims to get more real time to follow those flow of funds in real time. We built that in response to the Bybit hack, actually. The transparency is sometimes it's more of a liability than an advantage for the security and the competitiveness.
Interesting. So what you're saying is that the privacy, as we've talked about it in these new systems, could not only be a security measure, but it's not only a sort of human rights measure or a business reason for having it. It also could be a security reason that is actually makes you safer.
Definitely. And I was taking a little bit of look at your all's project and some of the use cases. I'm just curious, like, what use cases are you all looking to more or less enable with your like privacy value prop?
Yeah, so I mean, we haven't gone to mainnet yet, and we're releasing our product soon. We're very focused on order books, on stable coins, that kind of thing. I can't talk too much about it at the moment, but we're going to come out with some use cases, and it very much aligned with what you talk about in this report, with the type of transactions that you're focused on there.
Got it. Okay. I thought I would toss one back at you. And correct me if I'm wrong, but you all are using Starks.
Correct.
as a way to do it. And it stood out to me because the Starks, I believe they look to be quantum resistant, as in they're using the hash functions instead of more the elliptic curve
Exactly.
cryptography.
Exactly. And that's one of our sort of USPs is we are more quantum resistant than other forms of privacy chain, especially the ECC type chains, which is most blockchains.
Got it. And one of the things we were talking about before, going back and forth over email, was the zero knowledge proofs versus what I call like selective disclosure that we see, over in the Canton ecosystem. I'm curious, maybe like tossing it back at you. I'm curious to get your thoughts on the Solana. So the Solana confidential transfers, and I believe there was a bug in there. Because I kind of see the Solana more like crypto native world where they're taking the zero knowledge proof approach, and I believe Google is probably the biggest like implementation I've seen of zero knowledge proofs in their wallet. And but when we talk to institutions, it's zero knowledge proofs, complex technology. So getting over that piece, but then the implementation part and being able to go back and say like, how do we do our like record keeping and auditability? And when they see things like the confidential transfers issue, it just like comes to mind, and they say like that's like very complex. I guess what is your view on that, like zero knowledge proofs for the institutional side of things?
Well, when it comes to Solana, I don't know a lot about their privacy technology, so I can't really speak to that. I mean, we'll have to see. I mean, there haven't been a lot of implementation so far, and I think there are some, regulatory issues around it. And that's kind of I think there's a big kind of white elephant in the room here. And I think you really touch upon that in the report. It's like, what is going to be the regime that regulators are going to be happy with as we try to square the circle and have both auditability, but also, confidentiality for participants. So there are a number of ways to do that, as you touch upon. But I think CK is still, it's not unproven in terms of technology, but it's unproven in terms of regulatory treatment.
Yeah, and like I think that like institutional scale implementation. That's why I do have my eyes on the Google example.
Right.
It seems like that one is institutional level go to market.
Yeah.
I believe it's the example of like proving your age. It's like the classic example of proving your age without showing your home address on the ID, which I think is a great use case. Very simple and like easy for folks to understand.
Yeah, I mean, CK is in the next version of Google's mainstream wallet, so it doesn't get much more mainstream than that. Yeah, and it's exactly that. It's that classic example of, you don't have to show your driver's license at the bar to prove your age. You can just prove that you are old enough to go into the bar. So it's not like giving all of your information to get in somewhere.
Definitely. And I think on the regulatory side, regulators, law enforcement are now doing a bit of a reshuffling of expectations. Again, because I tell them they've been a little spoiled the last 5-8 years, but now I think they're doing a reset of the expectations, and where their questions are now are going back to those view keys. And law enforcement regulators, they're saying, well, should we go get the view keys? I think that would be very complex and burdensome for them to do. They also are looking to partners like ourselves. Like, do we hold the view keys? Do we work with asset issuers to, some of the things we're exploring is building out T's, so trusted execution environments, to do things like generate the view keys, to access them, to store them, to keep that private data in the T's, and then basically bring out derivative data sets where we're still protecting that raw private data. And then we're allowing firms to do their BSA, AML compliance, really looking for that high severe type of risk, while, we're looking to balance both sets of expectations. So from the builder side, as well as from the user side, there's an expectation of privacy. And then from the, let's say like custodian exchange side, they still have an expectation of they have to do their screening. So if there's a large amount of funds that come in or a large amount of funds that go out, under certain circumstances, they do need to be able to see what's going on. So that's what, I think we're really pushing the boundaries on, is what is the technical implementation, as well as from like a legal policy view,
Right.
how you do things. Like a really great question is international law enforcement regulator request. So say like you're based in the United States, or vice versa, you're based in the EU, and someone from a different jurisdiction is asking for that private data. Kind of what is your governance procedure to either allow for it or to block that request? So that's something that we're continually working on with issuers as well as our regulators, law enforcement customers.
Interesting. Just on the regulators and sort of compliance industry, I mean, who are your chief, collaborators there? Are there agencies out there that you think are further along in terms of accepting this new type of compliance?
I think so. So I can't speak to all of them in details, but some of the big buckets. So we work with national security agencies, we work with law enforcement, and we work with financial capital markets regulators. In the public domain, to that I would flag, again, this is just a US point of view because that's what I'm most familiar with. The Securities and Exchange Commission, maybe 2 months ago, they held a roundtable that was open to the public on financial surveillance and privacy. And I think there could be a innovation exemption coming out related to the financial surveillance. What is the reporting requirements? How much information do certain entities playing in that space have to provide, just based off of the public statements at that roundtable? And then the Treasury Department, and I think in the last month or two, they put out a paper on innovative technologies to combat illicit financing activities in the digital asset space. And they do cite zero knowledge proofs in that paper as a potential solution. So it seems like regulators are open to more privacy-based solutions in the marketplace. And I think, an ideal state is where the pendulum stops swinging so much. And there is a balance of, there are privacy solutions out there, but there are tools to monitor for when bad actors are looking to abuse those systems without impeding on all the private data of every single user in there automatically. I think that's the balance of very classical thing, like help the good folks do what they're doing and then stop the bad folks from abusing this neutral technology.
Right. So you looked at different ways to basically do that in the report. Do you have a favorite of the methods, and do you see kind of a way forward from the report into the future?
Do I have a favorite? Whatever our clients like to do. No, we're providing some guidance there when it gets to like rubber hits the road and what's technically feasible. From what we're seeing, the asset view key and that implementation has been the most popular. Potentially because a lot of the groups that we're working with right now or are looking to come to market are stablecoin issuers or are doing some form of tokenization, something like tokenizing various securities. And in that model, there is infrastructure popping up to manage those view keys. Some entities want to hold them themselves. Other entities want to give those view keys away. But I think in the regulated and registered space, so for stablecoin issuers, that it starts to become a very clean model where there are expectations that those issuers will have, BSA requirements. Those assets, so those stable coins, will be onboarded to exchanges, and exchanges need to be able to see certain information. But there are many use cases where like retail folks are doing small, low risk transactions. And so most likely or potentially that data doesn't need to be pulled in to monitoring platforms. Really just the high risk or severe risk type of activities would be pulled in and automatically flagged. So I don't think it's a favorite. I think this was coming to market because of the demand.
Right.
But from the stablecoin, tokenized kind of asset issuers, that asset level view key where it can provide risk signals for high and severe risk. And then the low risk type of activities or no risk type of activities, that data is really staying private from what we're seeing.
Right. So it's possible those sort of early big use cases for crypto, sort of mainstream crypto, stable coins, could maybe set the agenda around the type of technology we see in these new environments.
Yep, I totally agree. Another like analogy or metaphor could be the HTTP to the HTTPS
Right.
type upgrade, where I think in the former, folks were comfortable on posting on forums, so there was some adoption, but people weren't comfortable putting their credit cards and all their financial information on the internet and doing transactions. Right. And this could be a similar upgrade to say, now that we want to do like payments and tokenized, repo at scale, we do need to add on that S so we can have enhanced security, privacy, competitiveness, so on and so forth in on-chain markets.
Good. All right. So I think we've come to the end. Thanks very much for your time, Liam. And we look forward to seeing more of the work you're going to bring to the table from TRM. And anyone's interested in the compliance field around privacy currently and perhaps in the future, you should check out this report, and we'll link to it in the show page of the podcast. Thanks very much, Liam.
Likewise. Thank you so much for having me.
So